Good evening, students. Welcome to the session. Have you revised the last class that we have discussed about the international taxation in respect of the NRI transactions? Yes. Any questions so far? So today we are going to get in-depth understanding again about the indirect transfer where we had, left last time. So in case you have any questions or any doubt, please do let me know whatever questions that you face. Have you revised first of all? Yes. So today I'm going to discuss more about the indirect transfer. In case you have any doubts, any questions, please do let me know. So this is, see again, the indirect transfer would basically be asked as a part of, either as a practical question or it may be asked as a kind of case study, case scenario also. So from that perspective, it is important. However, it has not been tested so far. But having said that, it still remains a very, very important area, which is you need to understand. So if you have any questions, please feel free to ask me. Okay, so let us start with it. So I'll just quickly revise with you about the indirect transfer. Yes. Okay. So yeah. So what did we discuss last time? When will we say that the assets are deriving the value, the shares of the foreign company are deriving the value substantially from the Indian asset? What is the test with respect to that? Yes. Yes, what is the test, students? When do we say that the shares of the foreign company derive the value substantially from Indian assets? When the two conditions are satisfied. What were those two conditions? Yes, please tell me. Yes, please. Yes, students, faster. I'm not getting any answers. One, that the value of the Indian assets should be more than 10 crores. And the FMV of the Indian assets should be more than 50% of the FMV of the total assets of the foreign company. Right? So, these are the two conditions. But on what date you will check the FMV? Yes, Prashant, correct. On what date you will check the FMV? Yes. On what date do we look into? What is the specified date? Yes, Prashant, specified date. But what is the specified date? Yes, students, faster. I need the answers. What is the specified date? Yes, please. It is the date of the transfer or the date of the accounting year, last date of the accounting year. But what is the condition for that? Which date you take? Yes, Prashant, correct. So if you have to ask the question, book value of the assets of the FCO are greater than the book value of the assets of the FCO on the as on the date of transfer are greater than the book value of assets of FCO on the accounting year end by 15%. If yes, then you take the date of transfer. And if the answer is no, you will take the date of the accounting year end. Are we clear? Yes or no? So that is how you particularly decide about the indirect transfer. Are we clear? Any questions so far, students? Okay. Yes or no? Fine. Okay. So let us move further. So let me give you the further understanding about this indirect transfer. Now, this particular provision has the exceptions also. What are the exceptions? Let us try and understand. So, meaning the indirect transfer provision will not be applicable, to certain companies, or basically it will not be applicable not to certain company but to certain shareholders. Now, what will include in that exception? Number one, the transfer by the foreign portfolio investors. So any capital asset, which is the share of a foreign company, which is held by way of investment in the foreign portfolio investor. In the foreign portfolio investor, that will not be deemed to have been situated in India. Any idea what is the foreign portfolio investor? Yes. Any idea who is the foreign portfolio investor? So see, there are two kinds of investors that come to India. One is the direct investment, which is called as foreign direct investment. Secondly, it is foreign portfolio investor, which is basically the investors who are very high net worth investors, which form a company and then invest in the Indian stock market up to 10% of the share capital of those companies. So that is the foreign portfolio investor. So what happens when the foreign portfolio investors are there? So foreign portfolio investors are basically incorporated in the foreign jurisdiction, right? Now, if they are incorporated in the foreign jurisdiction, then what happens is that they basically try to get the investments from different individual investors and then invest in the Indian companies. Now, these are the genuine investments and not there for the tax avoidance. So, if any investor is holding the shares of these foreign portfolio investor, which is then holding in the Indian company, now if that investor transfers the shares of or takes the exit from the shares of the FPI, that will trigger indirect transfer. So therefore, the exception is carved out for that. So basically, what does the Act tries to tell is that in case the investments are held in the foreign portfolio investors, then in that particular case, we will give you the exception. Meaning, even if you transfer the shares, it will still not be considered as the indirect transfer of assets. Are we clear? So just write down. I think 1 second again. This app is creating some problem. Just give me a minute. One second. So just write down the exceptions. Investor holding, the shares in the, or you can write the non-resident investor holding the shares of foreign portfolio investor. Okay. So any income accruing or arising to those non-resident investors will not be considered to be falling within the indirect transfer provision. Clear? Any questions till now? Any doubt? Yes. So those are outside the purview of this thing. Second one is the transferor if it does not hold the right of management or control. So next one is transferor not holding the right of management or control. So see students, what happens is that, for example, there are these kind of small investors which are there, right? So if those are the small investors, if they also get captured under the indirect transfer net, just because they are transferring the shares of the foreign company, so that will cause the hardship to them, right? So therefore, to give them some amount of leeway for the small shareholders who are not holding the right of management or control, this particular exception has been created. Are we getting it? So that is why they have kept these transferors who are not holding the right of management or control in the foreign entity outside. Last one is the transferor having less than 5% shareholding in the foreign company. So basically, these are considered as the exception. So these are the small shareholders which are there. Are we clear? So they will not be falling within the purview of the indirect transfer. So if you do not hold any right of management or control, nor you hold more than 5% in the company, so therefore you will be considered as not falling, even if you sell the shares of the foreign company which derives the value substantially from Indian asset, it would still not be attracting the indirect transfer provision in your hand. Are we clear about this, students? Yes or no? Yes. Any questions? Any doubt? Yes or no? Clear? Okay. So now let us consider a particular case scenario in this respect so that we understand the implications of the indirect transfer provisions in India. So that will help you basically to identify that how this indirect transfer provisions get attracted. So a small example we have discussed in the last class, which was the case of Vodafone only, right? So I'm considering the same scenario, but I'm giving you now different situations. So based on those situations, then you can identify that whether we will attract the indirect transfer provision in the hands of the foreign company or not, right? So as I said, what you need to check is you need to or not. Okay. So I've taken one small example over here, and we will understand in different situations what will be the possibilities. Okay. So for example, ABC Limited, a company incorporated in Mauritius, is a wholly owned subsidiary of the UK company. This UK company enters into a share transfer agreement with another Singapore company to transfer the shares of its Mauritius entity, right? The agreement has been entered in UK. The consideration has also been discharged in US dollar from the UK bank account. And we are given three situations over here that the ABC Limited Mauritius has certain tangible or intangible assets located in India, and the following information is provided with respect to that. So let us consider one by one situation, and you will have to give me the answers for us to understand that whether the indirect transfer will get triggered or not. So first situation, the date of transfer is given as 25th June 2022. The last year of the accounting period is the calendar year 21. The book value of the assets of ABC Limited Mauritius as on the date of transfer is given, which is located in India, located outside India, and the book value of the assets on the accounting year end date is also given. Now you are required to assume over here that the Mauritius company has liabilities pertaining to these assets which are situated in India and outside India. There is no amalgamation or demerger which has taken place, and they own the PLC, ABC PLC, which is a UK company, owns individually more than 5% of the shares of the Mauritius company. Because if it is less than 5%, what did I tell you? If it is less than 5%, what did I say? The indirect transfer will not get triggered because you fall under the exception. And it says that it does not hold the right of management or control in ABC at any time during the 12 months before the transfer. Does it make any difference? If the ABC UK is not having the right of management or control, does it make a difference? Yes. Yes or no? Does it make a difference if the right of management or control is not there? Answer is no. Because the holding is still more than 5%. So the act which is there, it says that if you do not have the holding more than 5% and you do not have any right of management or control, only then you will be outside the purview of the indirect transfer provision. Are we clear? So now tell me, in the first situation, you have to assume the book value is equal to the fair value itself. What will be the implication? So here, my question is that if you look at the book value of the asset, first you have to identify the specified date. Now, since I've said the book value is equal to the fair value, so at least that part is sorted, right? Now, what will be the specified date? On which date you will consider the book value or the fair value for the purpose of determining that whether the shares of the Mauritius company derive the value substantially from the Indian assets. So for that purpose, what is the specified date in the situation one? Yes. What is the specified date? Yes, students. What will be my specified date? Yes, please, faster. I'm awaiting your answers. So, question 1 is identification of the specified date, isn't it? So, whether the book value of the assets as on the date of transfer is greater than 15% of the book value of assets of the foreign company as on the last day of the accounting year. So in the situation 1, how much is the value of asset you will consider as on the date of transfer, students? What is the value of asset that we will consider? Yes. Please give me the numbers. Yes. What is the value of the asset that we have to take as on the date of transfer? Yes, students, please be faster. Yes, I'm not getting answers. No.
टोटल वैल्यू ऑफ एसेट लेंगे.
Sorry?
टोटल वैल्यू ऑफ एसेट लेंगे.
Yes, Ankit, right. Prashant, it will not be 56 crore. It will be 56 plus 58 crore. So it will be 114 crore. Yes, Ankit, you are correct. We will take the 114 crore over here versus so 114 crore versus 100 crore. So is it more than 15% of the book value of the assets as on the accounting year end? How do you check that? So 115% of 100 crores is how much? 115. 114 crore is less than 115% of 100 crores. Isn't it? Got it? We don't take only the Indian assets. We will take all the assets over here, whether located in India and whether located outside India, for the purpose of determining that whether it is for the specified date, we have to see whether the book value of the total assets is more than 15% of the book value of the assets as on the last day of the accounting year end. Yes or no? Are we understanding this particular point? So 114 crore is lesser than 115% of the book value as on the last day of the accounting year. So therefore, the specified date will be the last day of the accounting year end. That is right, Ankit. It will be 31st December 2021. Are we clear? So therefore, here you can just write it. This is less than 115% of 100 crore. Are we clear? So we will take your last date of accounting year as the specified one. Fine. First, we will identify in all the three situations what is the specified date for us. Fine. In situation 2, what will happen? In situation 2, what will happen?
मैम 115 से एक्सीड कर जाएगा तो फिर वो डेट ऑफ ट्रांसफर वाली स्पेसिफाइड डेट हो जाएगी.
Sorry?
मैम ये टोटल जो इसका बनेगा 116 करोड़ बनेगा डेट ऑफ ट्रांसफर पे।
करेक्ट,
तो फिर डेट ऑफ ट्रांसफर वाली डेट जो है वो स्पेसिफाइड डेट ट्रीट करी जाएगी।
करेक्ट, यस. So this is 100 crore and this is greater than 115% of 100. So we will take the date of transfer as 25th June. Are we clear? What will happen in the last scenario? Yes.
मैम डेट ऑफ ट्रांसफर वाली डेट ही मानी जाएगी स्पेसिफाइड।
Okay. So basically here in the third instance, this is 18 crores versus this is how much? 15 crore. Now, is this more than 115% of the 15 crore? Yes,
यस मैम।
it is. So therefore, we will take again the date of transfer.
मैम
Yeah,
मैम वो ऊपर वाली जो कंडीशन थी टैक्स अमाउंट ऑफ 10 करोड़ एंड 50%
we
ऑफ
will
द
come to
वैल्यू
that
ऑफ ऑल
condition.
असेट्स।
Yeah.
ओके मैम ओके।
Okay, we'll come to that condition as well. So basically, see, the first condition that we need to see, students, is that what is the specified date? That second thing which is there, that whether the value of the Indian assets is more than 10 crore and it should be representing more than 50% of the assets in India, right? So that condition will come only when you identify what is the specified date. Because for checking that condition, no, you have to take the FMV on which date, right? So अगर आपको याद रहेगा, in the last session, what we were discussing, if you look at it, what did I say? To determine if the shares of the foreign company derive the value substantially from Indian assets, you have to check that the FMV of Indian assets is more than 10 crore as on the specified date. What is specified date? So to identify the specified date, first we have to do this particular calculation. That whether the book value of assets of foreign company as on the date of transfer is greater than book value of the assets of foreign company on the accounting year date by 15%. Are we clear? Yes or no?
यस मैम।
Okay. Now going back towards our question. So now you will check that whether these two conditions are getting satisfied or not. Right? So here, if you look at it, what we need to see is whether the FNB as on the specified date is exceeding the 10 crore. First thing. But here I have written assume book value is equal to FMB. So I have not taken a separate FMB. Right? So in again the situation one, whether the book value of the Indian assets is more than rupees 10 crore. So on which date you will look at? And whether it represents more than 50% of the value of assets in India. Yes.
मैम फर्स्ट केस में 50% से ज्यादा है।
50% से ज्यादा है. So what is the number that you are comparing?
मैम 60 and divide by 100 on
60
date of
and
transfer
divided by 100. Yes, that's
जो
correct.
मैम स्पेसिफाइड डेट का जो है।
Yes, correct. Because the specified date is the date of the accounting year end. Okay. So whether the FMV of the Indian asset is more than 10 crore? Yes. Whether the FMV of the Indian asset is more than 50% of the total assets? Yes. So in the first scenario, let's say I'm writing a two condition. The condition one, whether FMV greater than rupees 10 crore. And then my condition 2 is whether FMV of Indian assets, in the earlier case also this is Indian assets, okay, greater than 50% of FMV of total assets, right? So this condition is also satisfied and this condition is also satisfied. So therefore, indirect transfer is getting triggered. What about in the second case? What about in the second case?
मैम फेल हो जाएगी कंडीशन.
So we are comparing which two numbers?
57 divided by total.
57 divided by 116, right?
106. Yes, ma'am.
Yes. So whether in that case we are satisfying? First condition to satisfy हो रहा है. Yes. What about the second? Whether it is more than 50%?
No, ma'am.
No. So whether indirect transfer triggers? Answer is no. Because both the conditions need to be satisfied. In the third case, what is the condition? Whether we are exceeding 10 crores? So it's exact 10 crore. So क्या होगा? It is exact 10 crore.
फेल हो जाएगी मैम, एक्सीड्स लिखा है.
Correct. The act says it should exceed. It should exceed 10 crore and should not be exactly equal to 10 crores. So this condition will fail. And if this condition fail, the second condition, we may need not even be checking, but in case you are checking that also, even that is failing. Isn't it? So this is also not triggering the indirect transfer. Is this clear, students? Any question with respect to indirect transfer? Did you understand how do we check the indirect transfer provisions? Yes or no? Yes or no? Any questions, any doubt you have? Do you want to look at some for 1 minute and then we proceed further in case you are getting any doubt? Just have a look at it. I'm giving you 1 minute time. Yes. Any questions, any doubts so far? Yes, students. Is this clear? Shall we solve one more question on this particular point? Yes, perfect. Let's solve one more question on this point. Okay. So let me put forth the question before you. Sure, Ankit, we are solving one more question. Now this will be a little tougher. So let us understand the question. One second. I think there's again some problem with this. Yes. So ABC Limited is an Indian company, is owned by the ABC Inc. Mauritius, which in turn is owned by again UK government. So ABC UK acquired the shares of Mauritius on 2021 January for 10 crores. The Mauritius company acquired 20% of shares of Indian company on 1/1/22. The accounting period of Mauritius ends on 31st December, and as on 31st December, the book value of the assets was 25 crores. On 31st March 2023, ABC UK transferred the shares of Mauritius to another UK company at a price of 50 crores. The book value after the reduction of liabilities and FMV after the reduction of liability as on 31st March 2023 is as under. Mauritius company, ABC Indian company. So book value, FMV, liabilities are given. You tell me, first of all, what will be the specified date? So whether the book value of the assets of Mauritius company are greater than 115% of the book value of assets of the Mauritius company on the last date of accounting year. This is as on the date of transfer. Yes. You have to tell me which numbers you will consider here. Yes. Yes, students.
मैम स्पेसिफाइड डेट के लिए तो हम बुक वैल्यू यूज करेंगे
Correct.
मॉरिशस की 30 एंड 110
30 and 110. No. 30 is right.
110 नहीं लेंगे 30 एंड 25 करोड़ को कंपेयर
Yes.
करेंगे 25
Yes.
करोड़
Yes. 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 That is right. So basically, as on the date of transfer, कितना दिया हुआ है? As on the date of transfer. This was transferred on 31st March 2020.
मेरा नेट
Right? So this is my date of transfer. Correct? So 31st March 2023 ko, what is the value? As on 31st March 2023, which is my date of transfer, they have given the book value as 30. 30. Whether it exceeds by 115% of what is the accounting year end? 31st December, right? 31st December 2022 को book value कितना दिया हुआ है? So this is my accounting year end, right? So what is the value? It is 25 crores. So whether it exceeds 115% of 25 crores. Yes or no? Does it exceed or does it not exceed? Does it exceed or not? Yes, exceed. So what is the date he will take? So my specified date will be, what is my specified date? Date of transfer. Yes, Ankit. So this will be 31st March 2023. Correct? Okay. Now we have to see whether the value of the asset, to see the applicability of indirect transfer, what you will check? Value of Indian asset is greater than, so this is the value, means the FMB, rupees 10 crore. This is as on the specified date. Specified date is what? 31st March 23, which is my date of transfer. So what is, whether the value of the Indian asset is exceeding 10 crore? What is the value? Which numbers again you are looking at?
मैम 50 and 80 करोड़ 180 करोड़ देखेंगे फेयर मार्केट वैल्यू। फेयर मार्केट वैल्यू देखेंगे मैम 50 and 180 करोड़।
50 and 180. Will you see? The answer is no. Why will you see 50? For the first condition, whether the FMB of the Indian assets is more than 10 crore, why would you see the 50, which is for the Mauritius company? You will only see 180.
अच्छा 180 and divide by total.
Yes. So first is that FMB of the Indian assets is more than 10 crores. So it will be 180 plus 20. So this is the book value after the, or FMB after the reduction of liabilities, if you check it. This is the FMB after the reduction of the liabilities. So you will add another 20 crores of liability into this. If you remember, what did we discuss? It has to be FMB and considering the liabilities also, without reduction of the liabilities. Are we getting it? Yes or no? So here, what is the value that you will take now? 180 plus 20, which is 200 crores. Are we clear? Yes or no? Yes? So just write it over here. The first condition is satisfied. So it is 180 plus 20, 200, because FMB without reduction of the liabilities. Are we clear? So if you look at here, we had discussed this point that you have to consider the FMB without the reduction of the liabilities as such. Clear? Now what about the second test which is there? This is A, this is B. So FMB of the Indian assets is greater than the FMB of the total assets. Sorry, not like this. Sorry. So FMB of the Indian assets is at least 50% of the total assets of the foreign company. Isn't it? So greater than 50% of the total assets of the foreign company. Right? So if you look at it, what is the FMV of the Indian assets? And whether it is exceeding 50% of the total assets of the foreign company. Give me the answer. Yes. $200 divided by 250 crore. Yes, it will not be 200 divided by 250 crore, Ankit. Read the question once again properly. What is the FMV of the Indian assets? Yes, it is 200 crores. Right? So 200 is the right answer. But what is the FMV of the total assets? Total asset is 250. Right? However, if you read the question, it says ABC Limited is an Indian company, right? And the Mauritius company has acquired only 20% of the shares of the ABC Limited India. So we cannot consider the entire 200 crore student. Are you getting this particular point? So we cannot consider the entire 20%. We have to consider only the 20% of 200 crores. Are you getting this? So this has to be, sorry, this is not 250, this is 50 because 50 already includes the FMV of the Indian assets also. So this is 40%, sorry, 20%. So this will be 40 crore divided by 50 crore, which will be equal to how much? Yes, 40 crore divided by 50 crore. So whether the test is satisfied? Yes.
80.
Yes. So the test is satisfied. So here you don't take 200 crores because what will happen is 200 is not your FMB. So the foreign company is holding, the Mauritius company is holding only 20% of 200 crores. And in this 50 crores of FMB, this 40 crores is already included, right? Because this is the FMB of the total assets of Mauritius company. So therefore, you will take 40 divided by 50. Is it clear, students? Yes or no? So indirect transfer is getting triggered. Are we clear whether the indirect transfer gets triggered here or not? Any questions so far? Is this much understanding clear to you? Right? Yes or no? Yes, triggered. Fine. So, therefore, this indirect transfer gets triggered. Now, indirect transfer is triggered. So, therefore, here capital gain, or you will write here shares of Mauritius company are deemed to be situated in India. Are deemed to be situated in India. and therefore capital gain on transfer of shares of MO will be deemed to accrue or arise in India under section 9(1). Now, what will be my capital gains to? What is my sale consideration? What is the sale consideration?
₹10 crore, ma'am.
Yes. So it will be 10 crore. And what will be my cost? So sale consideration is basically 10 crore, right? Now what will be my cost? So sale consideration or your FVC is equal to 10 crore. What is my cost of acquisition? What is the cost of acquisition? Sorry, the sale consideration will be 50. How 10? It will be 50, na? The ABC has transferred the shares of Mauritius company to another company at a price of 50 crore. 10 crore will be my cost. This is 50, right? Sale consideration will be 50. And what will be my cost? Cost is 10 crore, right? Cost is 10 CR. Long term, short term capital gain. Whether it's a long term or short term. What is the period of holding? 12 months, 24 months. Whether it's a long term or short term. Long term. What is the period of holding that we are considering here? Yes. $24 months, right? It's an unlisted share. Correct? It's not a listed share in India. So 24 months. So this 40 crore will be my long-term capital gain, but not entire 40 crore will be taxable in India. So the rules to this section, precisely if I tell you, rule to the section which is Rule 11 UC, it says that only the amount attributable in India will be deemed to accrue or arise in India. So 40 crore, so they have given the formula which is capital gain into B divided by C. So this is basically A into B divided by C. So 40 crore into B is the FMV of the Indian assets as on the specified date divided by the FMV of the total assets as on the specified date. So FMV of the Indian assets as on the specified date divided by FMV of the total assets of FCO as on the specified. So this will be 40 crore into 40 divided by 50. Right? So this will be how much? 40 crore into 40 divided by 50. 32 crores. Correct? So this will be 32 crore taxable at, what is the percentage of the long-term capital gain tax rate? What is the percentage?
मैम ट्रांसफर उसने कब करा है? ट्रांसफर डेट मैम, अगर
Sorry, I'm not
पहले
getting.
मैम ट्रांसफर डेट शायद उसने 23 में करा है ना, 2023 में.
हाँ.
तो मैम वो 10% नहीं,
Right.
20%
Before 23rd July,
लगना चाहिए.
Yes. If it is before 23rd July, it will be 10%. No, now how 10%? Sorry, 10%
No, ma'am.
is for the listed.
No, ma'am, 20% लगेगा.
Correct. 20% लगेगा. 10% was for the listed companies. For the unlisted companies, we will go to 112. Section 112. If it is before 23rd July, there, in case of the long-term capital gain, it was not again, sorry, 20%. So in case of the long-term capital gain, under 112, in case there is a non-resident, which is transferring the shares, what was the tax rate? Have a look at the 112. What was the tax rate? July. Yes. Faster students, have a look at 112 and let me know. What is the tax rate? In the case of a non-resident, yes, if the long-term capital gain are arising other than 112A, right? And if it is unlisted securities, then it was 10%. So if I have to show you the act, let me reshare the screen. If you see this, in the case of a non-resident or a foreign company, this is a foreign company, yes. Therefore, if you look at the amount of long-term capital tax on the long-term capital gain arising from the transfer of a capital asset being unlisted securities or shares of a company. Is this an unlisted share? Answer yes. So shares of a company which is a private company or unlisted securities at the rate of 10% for any transfer which takes place before the 23rd
पढ़ाने
day
बैठ रही हूँ मैं 8:45 बजे इसको कंक्लूड कर दूंगी सेशन को.
before the 23rd day of July 2024. Are we clear? So therefore, if you look at this is 10% before 23rd July 2024 and not 20%. If it is unlisted, see, that's why I told you that you need to remember these tax rates. Are we clear? So this will be taxable at 20%. So just here write down. So this will be taxable at 10%. Under section 112 for a non-resident transferring, non-resident or the foreign company transferring shares of unlisted company. Are we clear, students? Is indirect transfer clear to you? So we have solved two comprehensive problems on the indirect transfer. Hopefully that has cleared your understanding of how do we apply the indirect transfer provision. Do you have any questions or doubts with respect to this? Yes. In case you have, if you have not understood any point, do let me know so that I can repeat it. So I'm just, for your purpose, I'm again repeating the entire thing. You need to first check that if the shares of the foreign company derive the value substantially from the Indian asset. What do we mean by substantially, students? So substantially means that the FMV of the Indian assets should be more than rupees 10 crore FMV as on the specified date, right? Secondly, the FMV of the Indian assets should represent more than 50% of the FMV of the total assets as on the specified date. Now, in order to identify what is the specified date, the Act tells you to compare the date of transfer with the last date of the accounting year end. If the book value, there you have to take the book value, not the FMV. There you have to take the book value of the foreign company's asset as on the date of transfer, whether it exceeds by 15% of the book value of the foreign company's assets as on the last day of accounting year end. If answer is yes, take the specified date as date of transfer. If the answer is no, take the last date of the accounting year. Are we clear? Any questions? Any doubts? Yes, I need your answers. Is this understanding clear? See, this question could be asked in the part of case scenarios as well as it can even be asked as a part of the full-fledged question. This could be also part of an adjustment to the main question. Anything that you have not understood, I need at least yes or no from you that if you have understood these points very clearly before I proceed further. So I please request you to let me know in case you have any doubts or you have any questions or the understanding is not clear so that I can repeat it so that it becomes crystal clear for you. Fine. If I'm not getting any answers, I'm assuming that all of you have understood. Okay. Now, last one point with respect to the indirect transfer, students. Again, going back to my original example from where I had started. If you remember, this example is what we had started. Now, let us say that, let's say, for example, this company B distributes the dividend to company A. Whether the question is, dividend will also be deemed to accrue or arise in India since the share of the company B is deemed to be situated in India. So that is your question. So just because now the situs of the share, it is being said, because indirect transfer is getting triggered, what did I say? The share of company B will be deemed to be situated in India. So the question is, if company B declares the dividend, whether the dividend will also be deemed to accrue or arise in India? Because section 911 says what? 911, if you read it, what does it start? It says any income accruing or arising from the asset through or from the asset in India. So dividend is accruing or arising and the asset is deemed to be situated in India. Right? So whether the dividend will also be deemed to accrue or arise in India? Yes. So for that purpose, the CBDT has given a clarification through a circular. It has said that the dividend will not be deemed to accrue or arise in India. We are only trying to tax the capital gain on the sale of such shares, but we will not tax the dividend. So you can just write it over here. CBDT clarification. Dividend will not be deemed to be or deemed to accrue or arise in India. So that completes your indirect transfer. Any questions, any doubts? Yes, students, please at least do let me know that if you're following this, because I understand this is a very different concept for you. But I need to also understand that you are following this or not. So this also completes your entire section 911. I'm quickly recapping for your purpose. 911 had the income accruing or arising through or from the business connection. We discussed business connection is not defined. It just includes two things. One is dependent agent. Second is the significant economic presence, right? Dependent agent is what? One who habitually concludes the contracts in India or plays a principal role leading to the conclusion of contracts in India. Secondly, habitually maintains the stock of goods and regularly delivers therefrom. Third, habitually secures the order for mainly or wholly for the non-resident or its related parties. Right? So if that be the case, there will be the business connection constituted. Right? Independent agent who is working in the ordinary course of business and one who is not working mainly or wholly for one non-resident or its related party will not constitute business connection. We had seen business connection excludes the purchase for the purpose of exports, right? Secondly, SEP. SEP is what? Transaction in respect of goods, services or property. If the value of that exceeds rupees 2 crores, includes the download of data or software. Second, continuous soliciting or interaction with at least 3 lakh users. Then SCP is constituted. In both the cases, business connection or SCP, only the income attributable to the operations carried out in India will be taxed or will be deemed to accrue or rise in India, right? What is income attributable? That also we had discussed, which means how many activities you are carrying out, right? Income which is from any asset or source of income in India, through or from any property in India, through the transfer of a capital asset situated in India. And the foreign company's share will be deemed to be situated in India if the shares derive the value substantially from the assets located in India. Is 911 clear? Yes or no? Yes. I'm not getting any answers from any students. Please let me know in the chat boxes at least that are you able to follow it so that I can proceed to the next topic. Yes or no, students? Please do give me the answers. So let's start with, okay, thank you, Ankit. Yeah, so let's start with section 912. Now the rest ones are very simple. So 912 is with respect to the salaries. Is with respect to the salaries which are 912 as well as 913. is basically with respect to the salaries. So 912 is with respect to the salaries earned in India. 913 is with respect to salary payable by the government. So let's say, for example, see, do not forget, we are talking here only about the non-resident or RN1, right? We are not talking about resident, because I told you for a resident, 9 is irrelevant, because for a resident, global income is taxable in India, right? So I'm talking here about the non-resident. For a non-resident, let's say, for example, there is an Indian company which is making the payment of salaries to the non-resident employee. So let's say they have hired a non-resident employee and they are making the payment of salary. Or there is a foreign company which is sending its employee, seconding its employee to India and paying the salary for him. When can the salary be said to be deemed to accrue or arise in India? So let's say there is a foreign company or the Indian company hiring the non-resident employee. So salary to the non-resident. Now this salary will be deemed to accrue or arise in India if the services are rendered in India. If the services are rendered in India, which means the salary is earned in India. Rendering of the services mean what? Let's say you're working from home in UK and there is a UK company hiring you for providing the services in India. Whether the salary would be deemed to accrue or rise in India, answer is no. Rendering means you're coming to India, providing the services to the company from India. That will mean that the services are rendered in India. Rendered in India. In India means the employee is coming here and providing the services to the company, Indian or the foreign. It's very common in the multinational companies that the non-residents are seconded here to perform the services, to give the training to the Indian employees. So it's very, very common as a part of the multinational group. So on that, there will be the taxability. Under what section you will deduct the TDS on this salary? So when the salary is paid, whether TDS is applicable. You have done the TDS chapter. We have discussed this point at that point as well. Whether the TDS will be applicable under which section. Yes.
मैम 195 सेक्शन में
No.
क्योंकि मैम NRI को दे रहे हैं.
Yes, NRI is covered or the non-resident is covered under 195. But let me show you the act that we had seen at that point also. Any person responsible for paying to a non-resident, right? Any person responsible for paying to a non-resident, not being a company or to a foreign company, any interest or any other sum which is chargeable under the provisions of this act, not being income chargeable under the head salaries. So 195 does not cover these salaries. If you recollect, even in the TDS class, we had discussed this point that salaries are not covered under 195. So which is the section that will apply? We will 192. Apply 192. Yes. So if you go to 192 over here, Any person responsible for paying any income chargeable under the head resident or a non-resident. So one non-resident paying to another non-resident, the payer can be any person, the payee can be any person. So in case of the salaries paid to the non-resident, 192 will get triggered and not 195. Are you getting this? So this is how a question will test you in the examination. And you have to link and study. Only when you link and study, you will be able to answer these questions. So here, section 192 and not 195. Are we clear about this point? Yes. So that is about the salary deemed to accrue or arise in India. Now 913, which is there. As I said, this is for the government salary, a government employee. Salary paid to a government employee. So again, it says that any salary which is paid to the income from the salary which is payable by the government to the citizen of India for the services rendered outside India would be deemed to accrue or arise in India. So just write down. So if the employer is the government, so salary is paid to the citizen of India who is a non-resident. But he should be a citizen of India, right? Or even the services rendered outside India. See, if he is rendering the services in India, so 912 is any which way is going to cover him. 912 doesn't say it will not cover government employee. But additionally, if he's a citizen of India and providing the services to government of India, even if he's rendering the services outside India, this salary will be deemed to accrue or arise in under section 913. Are you getting this point? However, any allowances and perks paid outside India by the government to the Indian citizen for the services rendered outside India is exempt under 10(7). Are we clear? So, any allowances or perk to the employee by the government, or to basically you can write citizen of India by the government exempt under section 10(7). This is for services rendered outside India, right? And this is available irrespective of the tax regime which is there. You see, this exemption will still be available. Are we clear? So that is about the 912 and 913. Yes or no? So if, let's say, for example, there are the embassies which are operating in different countries. So Indian government has embassies in all the country, and usually the citizens of India are employed in those embassies. For example, there is an Indian citizen which is basically employee of, let's say, embassy of UK, Indian embassy at UK. So if he receives the salary, that will be deemed to accrue or arise in India. Even though he was a non-resident, even though he rendered the services in UK, it will still be deemed to accrue or arise in India. But whatever perquisite or allowances he may get, that will not be deemed to accrue or arise in India. because that will also be, of course, deemed to accrue or arise in India, but that will be exempt under 10(7). Are we clear? Yes or no? Any questions, any doubts so far? So if it is for the other than government employee, it will be deemed to accrue or arise if the services are rendered in. And the TDS will be under 190. If it is salary by government to the Indian citizen for services rendered outside India, that will be taxable. Even if for the services rendered outside India, that will be deemed to accrue or arise in India. Are we clear? Yes or no? Any question? Any doubt? Yes. Any question? Any doubt? Yes or no? Now there is one more point that I would like to highlight over here, which is again some sort of exemption to the employees which are there. So again, we will consider here before we go on to the next section, which is 913. Understand that there are few other exemptions that I would like to consider over here. Number one, the salary to a foreign employee. So remuneration received by the officials of the embassy of the foreign country. So remuneration which is received by an individual who is not a citizen of India for services given to the embassy of the foreign country is exempt under 10(6). So let's say, for example, if there are, so like Indian government has embassies in different country. In India, we have the embassies of the foreign country. We have embassy of Japan, we have embassy of UK, we have every other country will have an embassy here in India. So whatever services, so the employees who are coming here are maybe the citizens of the other country. That's why they are employed in the embassy of those countries. So the salaries which will be paid to them, of course, that will also be deemed to accrue or arise in India, but that will be exempt if the person is not a citizen of India. Are we clear? So let's say, for example, if there is a US citizen who is employed as the employee of US embassy in India, the salary which will be paid to him will be exempt. Are we clear? Yes or no? So just write down. Remuneration to a non-citizen of India by the foreign embassy exempt. Are we clear? The next one. So if for example, if there is an Indian citizen who is the employee of, let's say, US embassy, for him, this remuneration will be taxable, will not be exempt, because this exemption is only for the people who are not citizen of India. Next one, remuneration received for services rendered in India by a foreign national employed by a foreign company. So, remuneration to foreign national by a foreign company for services rendered in India. This is also exempt, subject to A, the foreign company is not engaged in any business or trade in India. B, the stay of the employee is less than 90 days. And C, the remuneration is not liable to be deducted from the income of the employer. So, remuneration is not allowed as the expense from the income of the employer chargeable to tax in India. So only then they will get the exemption. So basically this is called as short stay exemption. So let's say, for example, if Mr. A is coming to India, he is a citizen of India, but he has been a resident of US, right? Now, in that particular case, if he's a citizen of India and is even though a resident of US, then in that case, he cannot claim the exemption under this section. Are we getting it? But if, let's say, for example, Mr. A is a citizen of US and he is coming to India as the employee of the foreign company and is staying for less than 90 days, let's say he's staying for only 35-40 days, and the salary of A is not getting deduction in India in the hands of the employer, and the employer is also not engaged in any business over here, Mr. A's salary will be exempt. However, if employer is engaged in any business here, let's say employer has a branch in India, then he will not get an exemption. Are we clear? Any question, any doubt? Yes or no? So let's take a break for 10 minutes and then we get back. Okay. Students, so let's continue with our class. So now we are moving towards the next topic, which is 912 and 913 is done. Now we are moving towards 914. Again, a very, very small section, students. It is about the dividend. So 914, first I'll explain and then I'll give you the notes. 914 says that the dividend of the dividend paid by an Indian company outside India will be deemed to accrue or arise in India. That's it. So if the dividend is paid by Indian company, see, dividend is basically, students, the income which is earned on a share, right? It is a reward for investing in the share of that company. Dividend is a reward, right? So the dividends situs or linkage or the place of accrual will be where the shares of the company are situated, right? And that's where, we were asking a question that if these shares of a foreign company, which is deriving its value from Indian assets, is deemed to be situated in India, the dividend will also be said to be accruing or arising in India, right? That's why we were asking the question. So, in the case of dividend paid by an Indian company, what will be the source or where will be the source of that dividend? In India only, right? Because the shares are located in India, the shares are situated in India. And it's just a kind of clarification that 914 says. Tomorrow somebody should not say that dividends are paid outside India and therefore are not accruing or arising in India. The Act says dividend paid by an Indian company, even if it is paid in your foreign bank account, it will still be deemed to accrue or arise in India in the hands of non-resident shareholder. So just write down. What is the tax rate of dividend, students? Let us discuss now what is the tax rate of dividend. Yes. Which section we have for the tax rate? Section 115A. Section 115A talks about the tax rate. So let me take you to the 115A to understand the tax rate. Where the total income of a non-resident or a foreign company includes any income by way of dividends, the amount of income tax shall be calculated on the income by way of dividends, if any, included in the total income at the rate of 20%. So what will be my tax rate, students? Under 115A, it will be 20%. So dividends in the hands of non-resident will be taxed at 20%. If it is dividend received from a unit in an IFSC, it shall be 10%. Are we clear? So just write down. Tax rate 20% under section 115A. If paid by IFSC unit, it shall be 10%. So see, students, you have to link, as I am repeating quite a lot of time, you have to link and study. You cannot just, study the tax rate separately without understanding the provision. So you have to link it with the relevant provision. Are we clear? Now, if you recollect here one more point, I'm just trying to add over here. Dividend income from the business trust, if a person is a non-resident and is receiving the dividend income from the business trust, whether the dividend is taxable in the hands of the non-resident investor? Yes, because the trust is a pass-through entity. If you recollect, we have done this. But the dividend will only be taxable in the hands of the non-resident investor, or in case of any investor, if the SPV is exercising the option to pay the tax as per section 115BAA. And in that case, the tax rate shall be 10%. If the SPV does not opt for section 115BAA, then dividend will be exempt. Do you recollect this? Yes or no? Yes or no? This point was discussed. Yes, Ankit, very good. So you have to keep revising. That's what I'm trying to say quite a lot of time. Are we clear? So if you look at here, it says distributed income which is distributed under 194 LBA, which was nothing but your dividend income, right? So dividend which is there will be taxable at 10% for a non-resident. Now you can just write it over here. Let me make a otherwise small chart for you. Tax rate 115A 20% if paid by IFSC unit 10%, and if paid by business trust, if it is paid by business trust where SPV is exercising the option under section 115BAA, 10%. If SPV is not exercising the option under section 115BAA, this will be exempt. So this is how you have to remember these points. Are we clear about this? Fine. So this completes your dividend. Clear? This will complete your dividend as well. So in case of the SPV, we have already discussed this at the time we were discussing about the SPV taxation in the case of assessment of various entity, or sorry, the taxation of trust. That's where we had done that. And if you remember that in the case of dividend, there will be the TDS under 194 LBA also. The TDS will be under 194 LBA. Are we clear? Any questions? Any doubt? Fine? Okay. So now let's move on to the next one, which is section 915. Just write down. Now this is important. Royalties. So section 914 we will first consider, and then we'll move to the 915. First we'll talk about 914. Interest. However, we will do the accrual principle for all of these together, and then we'll individually talk about it. FTs, fees for technical service. For all these three, the deemed to accrue or arise in India concept remains the same. So three sections, 914, 915 and 916. Okay, for these three sections, the accrual concept remains the same. Now, what is the Act trying to say over here? Basically, the Act in these cases, in all these three cases, tries to link the accrual with the payer. It is dependent on the payer. Where is the payer resident? So, these will be deemed to accrue or arise in India. This is dependent on the payer. See, for business income, for capital gain, 911 was taken. And that was dependent on, for business income, it was business connection constitution. For the capital gain, it was the having the location of capital asset in India. For rental income, again, it was necessity to have a property in India. For salaries, you had a condition of having the services rendered in India or payable by the government of India for services rendered outside India. For dividend, paid by an Indian company. For the interest, royalties, FTS, it is dependent on the payer. So if the payer is the government of India, the interest, royalties, FTS shall be deemed to accrue or arise in India automatically. Remember, who is the payee that we are talking about? What is the status of the payee, whether he is a resident or a non-resident? Who is the payee, students? Yes, who is the payee? What is the status of payee? Who is the recipient of income, whether a resident or a non-resident? Yes. My question is to you. What is the status of the pay that we are looking at? Very simple question. So this entire section 9 is about a non-resident. The recipient of income being a non-resident. Isn't it? The entire section 9 is concerning the recipient of the income who is a non-resident having the source of income in India. Right? We are trying to identify whether he has a source of income, whether the income accrues or arise or deemed to accrue or arise in India. That is the basic concept of section 9. So the payee here is a non-resident always. Here we are talking about for that payee whom he is receiving the payment from. If he is receiving the payment from government of India, the income that he is receiving in the nature of interest, royalties, FTS will be deemed to accrue or arise in India. Are we clear? Next is, payer is a resident of India. In that case also, the income will be deemed to accrue or arise in India. However, there is an exception. The exception says that if the interest, royalties or FTS is in respect of business or profession carried on by that resident outside India, or for the purpose of making or earning any income from any source outside India, it will not be deemed to accrue or arise in India. So exception is if interest, royalties or the FTS is for business or profession carried on outside India or for making or earning any income from source outside India. Now, what does this mean? So, let's say, for example, there is one resident who has taken the loan from a non-resident and is making the payment of interest to this non-resident, right? So there's a person who is a resident of India. He has taken the loan from non-resident and he's making the payment of interest. So this interest will be deemed to accrue or arise in India because the payer is a resident. Now let us take an example. This is first point. Let's say if the loan is to be utilized for, let's say this is Mr. A. For Mr. A's business in US. Whether this interest will be deemed to accrue or arise in India, students? Yes?
No, ma'am.
No, because this will fall under the exception. So in this case, interest not deemed to accrue or arise in, because this is for the, since it is for business outside India. Are we clear? Any questions? Is this clear up till now? Fine. Last point. Let's say there is a payer who is a non-resident. If the payer is a non-resident, the income will be deemed to accrue or arise in India if the interest, royalties, or the FTS is for the business or profession carried out in India, is for the business or profession carried out by such person in India. Or for making or earning any income from source in India. So let's take an example again over here. Let's say there is Mr. A who is a non-resident. He has taken a loan from, let's say, Citibank US. Right? It's another non-resident. And it is paying the interest. Whether the interest will be deemed to accrue or arise in India? Answer is no. It will be deemed to accrue or arise in India if it is for business carried on by Mr. A in India. So if Mr. A borrows these funds for doing the business in India, then only this will be deemed to accrue or arise in India. So that finishes your source rule with respect to the interest, dividend, interest, royalties, and FTS. Any questions, any doubts so far? Yes, any doubts till now? Is the accrual concept clear for all the incomes? Yes or no, students? Any questions, any doubt? Fine. Now, let us try and understand the meaning of interest, royalties, and FTS. This is very, very important. What is the meaning of interest? Again, it's very simple. Yes. Interest is defined under 228A. So let me now take you towards the module itself to understand the meanings here. Yeah. So interest, which is there, interest means interest payable in any manner in respect of any money borrowed or debt incurred, including a deposit, claim, or other similar right or obligation. So meaning it is the interest on the money borrowed or debt incurred. And this also includes any service fee or other charge in respect of the money borrowed or in respect of any credit facility which has not been utilized. So this will also include any service fee that you are paying over and above the interest. Fine. So that is the meaning of the interest. Now, there is one important point with respect to the taxability of interest payable by the PE of a non-resident which is engaged in the banking business to its head office. Let us understand this. Before we get into the circular, we will understand what does this mean. So, let us take an example over here. Let us say there is the branch of a foreign company here in India. Let's say there is this holding company or head office. Let's not write holding company. Let's write the head office. This has a branch which is also called as permanent establishment in the international tax context. This is in India. This is outside India. Fine. Now this is very common practice that these HOs give some amount of loans to the branch for the working capital requirement, and this branch will be then paying the interest on the loan. Now you have done the branch accounts as a part of your CPT, IPCC syllabus in the accounts, right? I hope you recollect branch is not a different entity. It is very well part of the same enterprise. If you recollect how we used to do accounting for the internal income and the expenditure, we used to cancel the transactions. If you recollect, we will prepare the branch accounts separately, but when we prepare the accounts for the head office, we will cancel out the transactions which are undertaken between the branch and the HO. Elimination. Yes, Ankit. That is absolutely right. So, why did we eliminate those transactions? Why did we eliminate those transactions?
मैं वो किसी का एक्सपेंस है और किसी की इनकम थी.
Yes. So, because it is a payment to the self, right? Branch is not a separate person. It is a part of that enterprise itself. I am paying to myself. Let's say for example, there are a lot of CA firms which have offices in different cities, right? So let's say for example, I have a CA firm in the name of, let's say, Prerna Pishwari and Company. Now, let's say I have an office in Ahmedabad, let's say I have an office in Bombay, let's say I have an office in Jaipur. Now, if let's say for example, let's say I have a main office at Bombay. Now, this Bombay office gives some loan to, let's say, Ahmedabad office for the working capital requirement. And this Ahmedabad office will pay the interest to the Mumbai office. Now, when we will consolidate the Mumbai office books, will we take the deduction of that interest in Ahmedabad and consider it as the income of Mumbai? Answer is no. It is the payment to the self. Ahmedabad office is paying me interest. It is not income of Mumbai office. It is payment to self. Right? It's just the one entity. It has just different branches. Right? In respect of the non-residents which are engaged in the banking business, understand this is specifically for the banking business. What they say is that in the case of a non-resident being a person engaged in the business of the banking, so this is only for the banking business. What does the Act say? There's an explanation provided. It says any interest payable by the PE in India of such a non-resident to the head office or to any other PE or part of the non-resident outside India shall be deemed to accrue or arise in India. So this interest will be deemed to accrue or arise in India. Since here we are talking about the two different countries, we are saying that this interest will be deemed to accrue or arise in India for what? For whom? For the HO. Because HO is the entity which will file its return of income. Branch is not a person in the Income Tax Act. Branch is not a separate entity itself. So branch will never file the return. First of all, to file a return, you have to be a person. Is branch a person or HO a person? HO is a person. So the income cannot be deemed to accrue or arise in India for the branch. It has to be for the HO. HO is the one which is the assessable entity, which is a taxable entity, right? So for it, it will be deemed, this interest which is paid by the branch will be deemed to accrue or arise in India. Such interest shall be chargeable to tax in addition to any income which is attributable to the PE in India. So branch will have some income from the PE. It will have the branch profits. Sorry, HO will have the some income from the branch, which will be the branch profits. So in addition to the branch profits, this interest which is paid by the branch to the HO will also be taxable in India. Further, the PE in India shall be deemed to be a person separate and independent of the non-resident person of which it is a PE, and the provisions of the Act relating to computation of total income, determination of tax, and collection and recovery would apply accordingly. So for this limited purpose, it is saying that the PE will be considered as a separate and independent enterprise. It is not saying PE will be treated as a taxable unit or will be treated as a person. It is not saying like that. It is just saying that for this limited purpose, we are creating a fiction, by which means we are saying that PE is a separate and independent enterprise to just calculate the profits of the PE. So it is saying PE in India has to deduct the TDS on the interest payable to the head office or any other branch or PE of the non-resident outside India. So basically, when it will pay the interest on this, there will be TDS. There will be TDS which will be applicable. Are we clear? And then it is saying, so TDS under which section? Under 195. Right? And non-deduction of the TDS would result in the disallowance of the interest expense claimed by the PE and will also result in the levy of interest and penalty because the PE will be treated as assessee in default if it does not deduct the TDS. Are we clear? So PE will get a deduction of this interest expense. So interest deductible while computing profits of the PE in India. Are we clear about this concept? Rate of TDS will be, again, we are going to discuss now what is the rate of the taxation, and that only will be the rate of TDS. Because under 195, it says rates in force. So what will be the rate of TDS? Will be the rate which is at which the interest is taxable. We are going to talk about what is the taxability of interest. Now, interest is taxable again under section 115A. So what is the tax rate which is applicable under 115A? So under 115A, there are different tax rates which are applicable. One is the interest on the rupee denominated bonds to the foreign portfolio investors. So interest on the rupee denominated bond to the foreign portfolio investors, just write down. This will be 5%. This will be 5% and the interest will be taxable under which section? Although it is under 115A only, but the TDS which will be there will be under 194LD. So see, again, we are now starting to cover specific TDS sections. If you see, you don't have to do it separately. All you need to do is study everything together, what is linked, and by that way, you will even remember the provisions. Otherwise, if you study separately, you won't be able to remember. So this is the pattern that you have to follow even for revising for your exam. Are we getting it? So interest which is payable by the which is payable on the rupee denominated bond. Any idea what is rupee denominated bond? Yes. What is rupee denominated bond? Any idea? So basically, see students, rupee denominated bonds which are there are basically the bonds which are denominated in rupees and which are raised to collect the funds from the non-resident. Are we clear? So rupee denominated bonds are issued by the Indian company. They are also called as masala bonds. So these are the bonds which are issued by the Indian company and on which the interest is paid. These are nothing but the bonds. Now, this was basically till 2023 only, but I'm just giving you for information in case any question comes up to the or refers to the past date. So in that case, it was 5%, but this was only available till 2023. Are we getting it? So just write down, sorry. This was available until 2023. So 1st July 2023, if you remember, want to write it precisely. Post which this section 194 LD is not applicable. So this is only if the interest is paid prior to the if the bonds are issued prior to the 1/4/2023. So bonds should be issued before 1/4/2023. If the bonds are issued after 1/4/2023, this is not applicable. Are we clear? Secondly, in respect of the interest which is paid, by the government or the Indian company on the money borrowed in the foreign currency. So bonds which are denominated in foreign currency, if that be the case, on that it will be 20%. So interest on bonds or money borrowed which is denominated in foreign currency, it is going to be 20%. Are we clear? Next is interest received from the infrastructure debt fund. 5%. Interest received from the Indian company on money borrowed in foreign currency in respect of the interest on the if the interest is under a loan agreement which is prior to 30th June 2023, which is prior to 30th June 2023, it was. So loan agreement prior to 30th June 2023. This is I'm talking about the loan agreement and not the interest. Here also available if the bonds issued before 1st July 2020. So in this case, it was 5%. In this case, it was 5%. However, in respect of the money which is borrowed on the bonds which are listed on the recognized stock exchange in IFSC, the interest will be 9%. Or you can write it separately. Interest on rupee denominated bonds listed on IFSC 9%. Interest from the business trust. Interest of a business trust from a SPV which is distributed by business trust to a non-resident. Again, it will be 5%. And this is under section 194 LC. This is also under section 194 LC. TDS. Interest from the business trust. This we have already done. Interest from business trust on interest received from the SPV. Right? This will be 5% under section 194 LBA. Are we clear? So, more or less, see, I will request you to remember these ones, 20%, and then you can remember the interest on the SPV. More or less, you should remember these because 9% if you can, other ones are already till 2023. So, very rare chance you may get a question, but in case you get it, you know that it's 5%. But more or less, the tax rates now are 20%, 9%, and 5% in case of the SPV, distributing it to business trust, which becomes the income of the unit. Is it clear? Is interest part clear? Any questions so far? Any doubts? Yes or no? Any questions? Any doubts? Fine. Okay. Now we move towards the royalties. Now, we will again understand the meaning of the term royalty first, and then we will discuss about the tax rate. Now, royalty meaning is given under section 916. Okay, so let me again open up the module here. So, royalty which is there is defined under the explanation to 916. It says the royalty means consideration including any lump sum consideration, but excluding any consideration which would be the income of the recipient chargeable under the head capital gains. So, say for example, if I have an intellectual property, example of intellectual property could be copyright, patents, any kind of, the scientific research that I have patented, any kind of software for which I've taken the copyright, any music rights that I have, right? Any kind of these rights. If I'm selling those rights, to another person, wherein I'm just losing away my interest in that right. Now I am not anymore the owner of those rights. That will be taxable under the head capital gain. So, there are kind of, television shows which the producers, or the movies which the producers will make. And then will give all the rights relation to that to, let's say, Netflix. Now, the producer will not have any right. Or let's say, for example, I'm writing a book. Now I'm giving any rights to it, let's say, to Taxman. Now, if Taxman wants to modify that book, it can modify, right? It will just pay me the sale consideration. That from now on, you cannot say that I have written this book. How are you, making the changes in that book? That I cannot say that. So that will be obviously taxable under capital gain, because the capital asset is getting transferred. What is a capital asset? Property of any kind. Property is what? The bundle of rights. So any copyright, patent, trademark that I'm transferring, thereafter I don't have any control. It will not be taxable here. It will be taxable as capital. And capital gain for a non-resident will be taxable only when? Yes, capital gain for a non-resident is taxable only where? What is the condition for taxing the capital gain? For a non-resident, when will you tax the capital gain? Yes, condition. Yes, students, we just now discussed what is the condition for taxing the capital gain for a non-resident. When capital gain will be taxable for a non-resident in India? Yes.
मैम कैपिटल एसेट जब सिचुएटेड इन इंडिया होगा.
Correct. Capital asset is situated in India. So only when the capital asset is situated in India, capital gain will be taxable. Here we are not talking about capital gain. Here, therefore, it is excluding any consideration which is becoming the income under the head capital gain. So what is then the royalty? The royalty means consideration for transfer of all or any rights, including the granting of a license in respect of patent, invention, model, design, secret, formula, process, trademark, or similar property. Now, you should ask me a question, ma'am. It is saying transfer of all rights or any rights. So now, if you're saying there is a transfer of all or any rights, why is it not taxable under capital gain? Why is it taxable as royalty? There's a difference. See, it will be taxable under capital gain, students, when I am as an owner extinguishing my ownership over those rights. As I said, hereinafter I cannot say that I have written this book, you can't make any changes. After I've sold all the rights in that book to somebody else. But if I retain my ownership, I'm just giving a right, I'm transferring the rights for them to use it, for them to make a use of my rights. So they have a sub ownership basically, or a subsidiary right. I'm giving them a limited right. Even though I'm transferring my rights, I'm allowing them to use my patent. For example, McDonald's is allowing the franchisees to use the brand McDonald's. So McDonald's is transferring all the rights in relation to the trademark of McDonald's brand. Is it capital gain for McDonald's? Answer is no. Is McDonald's surrendering? Is the company McDonald's surrendering its rights? Answer is no. Is it extinguishing? Answer is no. It is still retaining it and allowing somebody else also to use it. So where I transfer any rights in respect of the patent so that the other person also can use it along with me, it will be considered as royalty. That will be the first clause. Imparting of any information concerning the working of or the use of a patent, invention, model, design, secret, formula, process, trademark, or similar property. If I am imparting the information, I have given you, let's say, a copyright. Not a copyright, let's say I've given you some design or a process. Manufacturing companies which are there, right? They have very secret processes. that how do they develop or manufacture a product. That's why they have this unique, way of selling the product, because the product developed is unique. Otherwise, everybody cannot sell all the kinds of products that this company is selling, right? For example, if you talk about the shoes of Adidas, it has something different, right? If you buy a shoes from a sports shoe from a local shop, will it be the same quality as that of Adidas? Answer is no. So it has a different process to make those shoes. Now, this process may be patented. And if it is giving this patent to some other company to, manufacture, sew those shoes, and then it is imparting the information concerning how do you do the entire shoe making, or how do you make the use of this process. It has coded a process that by this way we have to sew this. Or for example, you will see there are kind of garments, like for example, there are these big company Louis Vuitton, right? Now these company, when they sell these clothing, they have a secret process. That's the reason why they are able to charge such a premium amount for a normal dress or for the normal bags which they have, right? So the bags are very unique. If you see, there are first copies, second copies sold in the market, right? Now the people who are actually in that business will know that this is a copy of the original product, because the stitches are so fine that they will know that this is the copy, because they have a way of putting the stitches, and that's the reason why their bags command that premium. So if you buy a Louis Vuitton bag, they will have a certain way of stitching the bag. Now, when they give this process to somebody, so Louis Vuitton itself not, making the stitches of all the bags that is selling all across globally. It has the manufacturing units in Bangladesh, in Vietnam, in India. And therefore, they would be coming and imparting the training, or it's not training, they would be imparting the information as to how do we use this particular process that they have set up for stitching the bags. That payment which will be made by the Indian or Bangladesh company to Louis Vuitton will be nothing but royalty. Third one, use of any patent, invention, model, design, secret, formula or process. So you don't have any rights, but you are using any patent which is developed by different company, or any invention which is done by different company. Or let's say I have developed the design with respect to this building, the architectural design. I'm allowing you to use it to, I'm allowing the builder to use this design to construct the building. The builder that payment will be making to the architecture will be nothing but royalty. Imparting of any information concerning the technical, industrial, commercial or scientific knowledge, experience or skill. Let's say for example, I have developed some theory or made some discovery, right? Or let's say for example, I have a kind of unique program, right? Software program that I have coded. Now I'm giving you the information as to how do you write this program. I'm not selling you that program. I'm not, giving you any rights. I'm giving you the information as to how do you write this program. It's a highly technical skill, right? Or for example, I have developed some unique formula with respect to medicine. I am giving you the training as to how do you develop this medicine. That is, the company that will be receiving that knowledge will be paying the royalty. Next one, use or right to use any industrial, commercial or scientific equipment. So let's say for example, if a company has a machinery, it is giving this machinery, it's a highly technical machinery, to use it for the purpose of manufacturing. Whatever payments will be made is nothing but royalty. I'm not selling those machinery to you. I'm allowing you to use this equipment for a limited time and then return it to me back. Basically, you're going to give me the rent for that equipment. Right? So that will amount to royalty. That is not any normal rent. It is a rent for using that industrial, commercial, or scientific equipment. For example, there are these medicines which can be produced or which can be manufactured using a specialized equipment. For, let's say, example, there are some diseases which can be only cured through the medicines which are very limitedly available with, let's say, one company. So that company may be giving this equipment for the mass manufacturing. So that equipment rental which will be paid is nothing but royalty. Transfer of all or any rights in respect of any copyright, literary, artistic, or scientific work, including the films or videotapes for use in connection with TV or tapes for use in connection with radio broadcasting. So let's say, for example, I have a software, right? Now I have developed a software, Tally. When I give you the Tally software, all of you must be using Tally, in your article. So your principal would have purchased the Tally license, right? And it would be making the payment of that license to the Tally. It is owned by Tally company. That software is entirely owned by Tally. MS Office, that is owned by the Microsoft. You are all using the MS Office on your laptops. Now the payment that you make, that is not royalty, because you have not got any right to change the coding of that particular MS Office. Can you change the code of Tally? Can you change the code of MS Office? Answer is no. So what you are paying is a sale of a product to you. You are paying for a copyrighted product and not as a royalty for a copyright. Copyright meaning that I have a right to modify that product. Right? Or I have a right in the code of that product. Has the Microsoft given you code how it has written the MS Office code? Answer is no. You are getting a product to use. So that is not a copyright. That is the sale of a product. The same way when you purchase a book, do you get a copyright? Answer is no. You purchase a copyrighted book. Can you take the photocopy of the book and sell it in the market? Answer is no. Similarly, you cannot sell MS Office also. Now, you may be saying that we have different distributors for Tally licenses. Those are just distributors. Are they making any changes in the Tally license and then selling you? Answer is no. They are not allowed to make any change. They are just selling as is. So even they are not paying royalty. What they are paying for is the purchase of the product from Tally. However, if you look at it says, introduced another explanation for it. It says, consideration for use or right to use of a computer software is royalty. So the Act has said that even if you are just using the computer software, you are not getting any right to alter the code. You are not getting any right to sell the software further by making any changes in that. Still, it would be royalty. Because they have introduced the explanation 4 in the Act, which says that transfer of any rights includes the right to use a computer software, irrespective if it is transferred through the online mode or it is transferred through a CD, hard drive, pen drive, whatever. Are you getting this particular point? So, the Act has said that the license fee that you pay to Tally is nothing but a royalty. However, we have a Supreme Court judgment on this particular point, which is in the case of engineering analysis. In the engineering analysis, the question before the Supreme Court was that whether the payment for the purchase of the software results in the transfer of rights in respect of any copyright and therefore results in the payment as royalty. Because software is always has a copyright. Right? Any company, Tally has also done the copyright. Otherwise, everybody will copy the code of Tally and make another Tally. Right? So, Supreme Court examined this question in the light of the tax treaties. It is not talking about the Income Tax Act. Income Tax Act, it is very well clear that any payment which you make for using the computer software also, wherein you don't have any right in the software to change the code. You are just purchasing a copyrighted product, copyrighted software. Still, it will constitute royalty. So when you make payment to Tally, when you make payment to Microsoft Office, it is a license fee. It is a royalty. Even though at the end you are purchasing a product, because you are having a right to use a computer software, and the Act includes a right to use computer software within the definition of royalty. However, under the treaty, the Supreme Court held that where the software is purchased by the end user from a non-resident company, or where the license is purchased by the distributor who is not making any changes in the software coding and is just reselling to the Indian users. In all those cases, under the tax treaty, not under the Act, under the tax treaty, this will not constitute royalty as it is a sale of a copyrighted software and not of the copyright. There is no right to use given to, there is no right to modify given to the end user or to the distributor. They are just purchasing a product, a copyrighted product, and not a copyright in the product. So under tax treaty, there is no need to deduct the TDS. It will not constitute the royalty. Under Act, it will be royalty because of the specific explanation that we have. Are we clear, students? Any questions, any doubt with respect to this point? Yes or no? Is this clear, students? Yes? Yes or no? Okay. Now, it says consideration in respect of right, property or information. So says royalty includes and has always included consideration in respect of any right, property or information, whether or not the possession of such right, property or information is with the payer. Such right, property or information is used directly by the payer and the location is in India of that right, property or information. Now, what does this mean? Let's say, for example, students, you know, when you travel abroad, you pay the roaming charges to Airtel, Jio, Vodafone, whatever card you may be using, right? When you leave India, you start paying the roaming charges. What is roaming charges? Roaming charges are paid so that you can access your same number and you can get the calls, you can make the calls through the same number. Right? You are paying additional charges so that you can use the same number abroad. Now, how are you able to use the same number? Does the Airtel has the presence in UK or in other countries? You may go to South Africa, but you can still use the same number and get the calls in South Africa. How are you getting? You are registered with Airtel. So Airtel has, let's say, tie-up with all the telecom companies globally. Right? Now, what it will do is, it will ask, let's say, a telecom company in South Africa that, look, my user is coming to your country. He wants to basically use the same number which is registered in my network. But what you will do is, you will allow him to use your network because we two are entering into arrangement. So Airtel is entering into an arrangement with a South African telecom company so that now you will move towards the network of South African telecom company, but will have the same number that Airtel has given. Right? Now the Airtel that it is making the payment of fees to this South African company for this arrangement. Whether this will be royalty? Act says yes. Ideally, one would say, how is it a royalty? Because the South African companies, towers which are there are in South Africa. Is Airtel able to use those transponders or these equipments or these towers which are there? Answer is no. Airtel is just having an arrangement, a business arrangement. Airtel is just saying that you allow my user to be registered on your network, but the number will be mine. Airtel is not getting access of the towers which are situated in South Africa. Okay, the situation would have been different if let's say, for example, South African company would have said, okay, now the towers are mine in India and you pay me the fees for the towers that you are using to put your network. Is it the case? The answer is no. Towers are in South Africa. Airtel does not have any possession of the towers. The Airtel does not even use the towers. You are using the towers to connect with that network. You are just the user of Airtel. Airtel is not using. The tower is also not located in India. It is in South Africa. The Act says whether or not, irrespective whether the Airtel has possession of tower, whether the towers are used by Airtel or whether the towers are located outside India, still the payment will qualify as royalty. So this is what this explanation says. That royalty will include consideration for right, property or information, using any right, property or information, irrespective whether the payer has the possession, irrespective whether the payer is directly using or the location is in India. Are we clear? So if you see, they have amended the definition of process also. Process includes transmission by satellite, uplinking, amplification, conversion, downlinking of any signal. Cable, optic fiber or similar technology. So meaning where you are, using this kind of transmission of signal, it will be considered as a process. And right to use any process is royalty. Are we clear? So this is about the royalty. The last one is fees for technical service. What is the meaning for fees for technical service? Fees for technical service means any consideration for rendering of managerial, technical or consultancy service, including the providing the services of a technical personnel. So meaning when you give some personnel, there are these HR companies which will outsource their technical personnel or will give their technical personnel to some other company for giving them service. That is also under it. However, it will not include consideration for any construction, assembly, mining or like project undertaken by the recipient or consideration which is taxable under salary. So if you are into employment, that will not be FTS. So it is like a difference between contract of service versus contract for services. So if you are under the employment contract of service, then in that particular case, it will be under salary. Where you are acting as an independent consultant, it will be FTS. Construction, assembly, mining will not be FTS. Now, what is the meaning of managerial, technical or consultancy? Managerial meaning any kind of services which are in relation to providing the management services, managing the business, managing the board. That is the managing service. Consultancy, any kind of professional advice. That is consultancy. Then what is technical? The Supreme Court in Bharti Airtel case has held that the technical derives the meaning from the words managerial and consultancy, from the neighboring words. Which means the word derive its meaning or color from the neighboring words. So technical does not mean any kind of service where there is no human intervention. Automated services are not technical service. Technical service means that there has to be some amount of human intervention. Purely automatic services. For example, ATM charges. For example, any kind of service charges that are levied to you for the automatic services are not technical services. Are we clear? Also, the standardized services that you receive, for example, the stock brokers are levied the charges by the stock markets or stock exchanges. Now, stock exchange levies the charges to all the stockbrokers. That is not technical service. It's a standardized service which the stock exchanges are providing to the brokers. It has to be a customized service. I'm giving the service only to you in a customized manner. That is the meaning of technical services. So Supreme Court in Kotak Securities had held that it has to be a technical service, as in it has to be a specialized service. There has to be some human intervention. Are we clear? Income deemed to accrue or arise in India to a non-resident by way of interest, royalty and FTS to be taxed in India, irrespective of whether or not the non-resident has some presence in India, has some place of business or business connection in India, or whether or not the non-resident has rendered the services in India. Let us understand the example of this to understand what does it mean. Let's say, for example, there is this foreign company, right? Let's say it is providing some services of designing an equipment to the Indian company, right? That is one. It is also selling the equipment to the Indian company. And then it is also providing the services of installation of equipment in India, plus some training services. Right? Now, with respect to this is the sale of goods, student. This is sale of goods, right? Now, sale of goods will be taxable in India. The income from this will be deemed to accrue or arise in India. In what case? It will be deemed to accrue or arise in India if
it will be used for business purpose.
If there is a business connection in India. Right? This is the sale from this is a business income. So only if the foreign company has a business connection in India, only then this equipment sale will be taxable in India. If the equipment is sold outside India only, where the risk and rewards are passing to the Indian company outside India, it will not even be taxable in India. It will be considered as offshore supply of goods. Right? If it is sold in India, where the risk and rewards are passing on at the Indian port to the Indian company, it will then be taxable in India only if the FCO has a business connection. Installation of equipment and training services. This is FTS. Right? This is a technical fee. Since it is paid by the Indian payer and it is not for the business outside India, this will be deemed to accrue or arise in India. Right? Under section 917. Now, designing charges which are paid. These services are not rendered in India. These are not rendered in India. These are rendered outside India only. Right? These are rendered outside India. So, Supreme Court in one of the decision of a Japanese company, Ishikawajima Harima, had held that if these services are not rendered in India, it will not be deemed to accrue or arise in India. The services are not provided in India. The services are just utilized in India. So it will not be deemed to accrue or arise in India. To override that judgment of Supreme Court, this explanation was introduced to Section 9, which says that income will be deemed to accrue or arise in India irrespective of whether the services are rendered in India. So meaning just because the services are utilized in India, this will also be deemed to accrue or arise in India. as services are utilized in. Are we clear about this? Yes or no? Now, what will be the tax rate for the royalties in FTS? Again, 115A is the section which talks about all the tax rates. So it says that the tax rate in the case of the royalties and FTS shall be 20%. In case the non-resident does not have a PE. So basically, you can just write here. So tax rate for royalties or FTS. If non-resident has no PE in India, PE means basically a branch. And if non-resident has PE, then this will be 20% on gross basis. Gross basis meaning no expenditure will be allowed under section 115. And if it has a PE in India, net basis meaning you will consider all the expenses under section 44DA at the rate of 35%. Are we clear? Yes. Now the last one is section 918. Any sum which is paid by a resident Indian to a non-corporate non-resident or a foreign company or to a resident but not ordinary resident. So section 918. This is any sum paid to a non-resident or foreign company or RNOR. So any income arising outside India, which is basically any sum of money paid, this is without consideration. Right? By an Indian resident person, any sum paid by Indian resident. So this will be deemed to accrue or arise in. Are we clear? And this is going to be taxable under 56 to 10 if it exceeds more than rupees 50,000. Are we clear? So any sum of money paid without consideration by the Indian resident to a non-resident foreign company or RNOR will be deemed to accrue or arise in India if the money is paid outside India. Okay? If money is paid outside India. This is taxable under section 56 to 10 if greater than rupees 50,000. So this completes your section 9 entire. So with this, we will conclude the session for today. In the next class, what we are going to do is we are going to do the computational provisions which are specifically applicable for the non-resident. So I will request you to please revise and I will hand over now to Aparna ma'am.
Hello, very good evening, students. I am C. Aparna Chauhan, the BUS faculty. Actually, मैं बहुत देर से सेशन का वेट कर रही थी कि कब खत्म हो then I will come and join to you. प्रेरणा मैम मैं बहुत देर से देख रही हूँ. She is teaching all the things, the provision of section 9, international taxation portion, that is non-resident taxation. It is really very important topic, you know. So अभी आपने देखा होगा how she is teaching you. आपने देखा अब मैं 918 की बात करूं. If I talk to 918, यहाँ पे she is constantly saying if money paid. Money paid means in case if that non-resident is receiving in-kind transaction, suppose outside India, then would it fall under this section or not? Prerna ma'am, you just clarify. If a non-resident is receiving in-kind money, in-kind gift outside India, then would it fall within this section?
No, it will not, because this is specifically saying any sum of money which is paid, right? So now in case, let's say student, we receive any kind of property which is other than the money, so which is given outside India. Now see, other than money, in case you receive in kind any property, that will not have any linkage to India. That way, if India tries to tax it in the first class, what did I tell you? It will amount to extraterritorial jurisdiction, because the property may be located outside India, right? Money you can easily transfer, right? But as far as possible, any other property other than money, for example, we talk about immovable property. Now, how can you transfer outside India? If the immovable property is situated in India, then yes, we will say that
Yes.
Income will be taxable in India. But if it is, let's say, for example, immovable property, I am transferring a US property to a non-resident, it will not be taxable. If I am transferring shares of a US company outside India, it will not be taxable. But if it's an Indian company shares I'm giving, then it will be taxable, because India should have a jurisdiction over the subject. That is why we have section 9, because even if there is no jurisdiction, for example, shares of a foreign company, it is deemed to be situated in India by virtue of section 9. So you need to interpret these provisions as they are, because these are deeming provisions.
So here na, what I want to say you na, here the linking of the provision is very, very important. आपने देखा होगा यहाँ पे we are now already covered up to the tax audit. Recently we have finished the tax audit. Now we are starting with the international taxation portion basically. And this paper basically you must be aware of that this paper is divided into broad 3 sections. If I am saying 3 sections means first are the substantive provisions, then your procedural law, and then the international taxation. If I'm talking about the international taxation, then it has a weightage of 30 to 35%. Means आपका 30 to 35 mark का paper would be based on this international taxation aspects. आप देखोगे international taxation is such an area जो कि जहाँ पे you have a lot of chance of practices, practicing area jahan pe independently people are practicing in these field only. International taxation, not only there are in then another subdivision of international taxation are there. Like if I'm talking today, we are doing this non-resident taxation, then we will be moving to the transfer pricing. Transfer pricing, if I say, it is again an independent area for practitioners. So यहाँ पे in the subject also, in this paper also, 30 to 35% weightage is assigned to this international taxation portion. Let me explain you that in the study material, the whole study material is divided into 4 modules, and the fourth module is completely for international taxation portion, and this starts from chapter 21 to 28, right? In that 21 chapter is your non-resident taxation. The first 4 chapters, that is your double taxation, then your advance ruling, then your transfer pricing. Then the last 4 chapters are there based on the fundamentals of BEPS, overview of BEPS, then your application interpretation of treaties, then your model tax convention overview, and the latest development. उसमें जो आपका क्वेश्चन आता है application oriented आता है, but ये जो 4 topics if I am talking about, they are completely application oriented topics. तो इसको अंडरस्टैंड करने के लिए फॉर एग्जांपल मैं नॉन रेजिडेंट की अभी आपने देखोगे इन फर्स्ट टॉपिक ऑफ नॉन रेजिडेंट शी हैज कवर्ड दी रेजिडेंशियल स्टेटस. फर्स्ट ऑफ ऑल आप कभी भी स्टार्ट करोगे टैक्सेशन के लिए तो वहां पे पहला स्टेप है आपका दैट यू विल डिटरमाइन द रेजिडेंशियल स्टेटस ऑफ अ पर्सन. व्हेन आप डिटरमाइन किए रेजिडेंशियल स्टेटस, फिर क्या नेक्स्ट स्टेप सेक्शन 6 आया, वहां पे सेक्शन 6 यू हैव टू कम इनटू प्ले. Then section 6 के बाद residential status के basis में your scope of income will be determined, that what income would be chargeable to tax in the hands of non-resident, right? Section 5 comes into play. Section 5 आने के बाद Section 5 कहता है कि जो income आपकी deemed to accrue or rise in India होगी उस पे ही non-resident को tax देना होगा. एंड देन सेक्शन 9 जो आपका भी चल रहा है, सेक्शन 9 आया। अब सेक्शन 9 की क्या रिलेवेंस है, व्हाई वी आर डीलिंग विद द सेक्शन 9, हमें पता है 115A, शी इज टॉकिंग अबाउट 115A की रेट कंटिन्यूअसली इन बीच में, एंड देन शी इज टॉकिंग अबाउट द 195 प्रोविजन ऑल्सो। जब अगर क्वेश्चन सपोज एग्जाम्पल आपका सेक्शन 195 पे आया, ठीक है, 195 पे जब आपको क्वेश्चन आया, उसमें बोला कि वेदर टीडीएस इज रिक्वायर्ड टू बी डिडक्टेबल और नॉट, तो आप इंडिपेंडेंटली 195 के बेसिस पे यू कैन नॉट आंसर। आपको उसके लिए यू हैव टू कम टू सेक्शन 9। पहले आपको पता होना चाहिए कि दैट अमाउंट इन द हैंड्स ऑफ नॉन रेजिडेंट इज चार्जेबल टू टैक्स इन इंडिया और नॉट। इफ इट इज, then only the provisions, TDS provisions will be applicable. Am I right, Prerna ma'am? Yeah.
Yes,
So that interlinking is very much important. अभी आप यहाँ पे आपका चैप्टर में ऑलरेडी विद होल्डिंग टैक्सेस प्रोविजंस आर ऑलरेडी कवर्ड, बट उसकी इंटरलिंकिंग, अब वही बात है, बच्चा क्या करता है, जैसे उसने देखा कि टीडीएस की एप्लीकेशन है कि नहीं है, तो वो स्टार्ट कर देता रेट अप्लाई करना कि किस रेट पे कटेगा। वो ये भूल जाता है कि पहले हमें सेक्शन 9 के बारे में बताना है कि सेक्शन 9 की क्या इम्प्लीकेशंस हैं, वहां पे whether that amount is chargeable to tax in India or not. If it is, then he will come to section 195. उसमें rates in force का she has already explained कि what is rates in force, क्या rates हैं, क्योंकि आप देखो section 95 talks about the rates in force, tax is deductible at the rates in force। तो वहां पे आपको rates in force के लिए कहाँ जाना पड़ेगा, where you have to go to rates in force, you have to go to the schedule, right? Finance Act के schedule में every year the rate chart is given, that schedule you have to go along with the DTA rates. DTA again is very relevant for determining the tax at which it is taxable, or whether it is first of all it is taxable in India, the taxing rights are with India or not. That DTA is also there in your this thing, double taxation में। तो आपको मेरा कहने का मतलब है कि अब we are providing this BOS classes which are free of cost, and please come and you make full use of these classes. The faculty is there who is trying to explain each and everything by interlinking the provisions, giving you the basis why this provision have been implemented, why this provision being introduced in the Income Tax Act, because there is certain bases are there. When, because every year if you see, every year the Finance Act comes with a lot many amendments because of the need of the changes. Everything is changing, you know, we are moving towards the international transaction. Now the transactions are not restricted to the physical transactions, we are moving to the online transactions. तो आप बाहर में बैठ के भी वो people what they are doing, they are earning from India even though they are not physically present in India. तो वो मूव हो रहा है आज के डेट में। तो वी आर ऑल्सो प्रोवाइडिंग दीज क्लासेस। यहाँ पे मैं आपको यही बोलूंगी, प्लीज कम हियर and join the classes live. You should join the classes. Whatever the doubts you can ask one to one, face to face on the Zoom meeting platform is also provided by us. You please come and join and ask the faculty whatever the doubts. ठीक है, आप आज यार इन्होंने इतना पढ़ाया आपको, इसके बाद आपने कहाँ तक, सेक्शन 9 तक आपने कर लिया, स्टडी मटेरियल लीजिए आपने, ठीक है, शी इज ऑल्सो अपलोडिंग दोज नोट्स, इट इज फाइन, यू कैन यूज दोज नोट्स, बट बेसिकली मैं ये कहना चाहती हूँ बच्चों से कि आप अपने नोट्स खुद भी तैयार कीजिए। इसके बेसिस पे आपका जो होल्डिंग होगी ऑन द सब्जेक्ट भी, इट वुड बी मच मच बेटर देन व्हाट यू आर जस्ट रेफरिंग दीज नोट्स। तो ट्राई टू मेक योर ओन नोट्स। आप आइए यहाँ पे, वट एवर द डाउट्स इन द प्रीवियस क्लासेस, आप नेक्स्ट क्लास में आके जस्ट आस्क योर डाउट्स ऑल्सो, ठीक है। इसके साथ में आपका ये आपने क्लासेस की जितने प्रैक्टिकल प्रॉब्लम्स जो सेक्शन 9 से रिलेटेड है, आपके टेस्ट एंड नॉलेज में भी होंगे, आपके ड्यूरिंग की इलस्ट्रेशंस भी होंगे, ट्राई टू सॉल्व दोज क्वेश्चंस ऑन योर ओन, अपने आप से सॉल्व करिए उनको, पहले प्रोविजन पढ़िए, उसको अंडरस्टैंड कीजिए, देन यू ट्राई टू सॉल्व दोज क्वेश्चन बेस्ड ऑन दोज प्रोविजंस। इट विल गिव यू कॉन्फिडेंस कि हाँ आपको प्रोविजन समझ में आ गया है। जो चीज नहीं समझ में आ रही है उसको अंडरलाइन और हाईलाइट कर सकते हो, ठीक है। तो मैं, और आपका यहाँ पे सबसे अच्छी चीज है कि हमने आपको एक फीडबैक फॉर्म, द BOS हैज प्रोवाइडेड यू द फीडबैक फॉर्म आल्सो, यू कैन गिव अस in case if you feel कि something, you know, as I noted कि she is really explaining the things in a very lucid manner with the examples, with the illustrations, making with the chart and everything, but still if you feel कि there is some more questions need to be added, some more clarity need to be added, you know, so you please come and just fill the feedback form so that we can go through your feedbacks and we'll try to improve on the classes. right? This is one thing. And I am the BS faculty. In case if you have any doubt, please, you can definitely ask to me also. You can ask to her. She will just, be in touch with me and she will ask me. Then in that way, I will come and, reply those queries. In case if you feel ki some doubts are there, you want to really ask relating to your examination, your study material, the publications, anything which you want to ask from me, then definitely I am still waiting. I am finding there are two students right now, Ankit Kumar and Kirti. So, Ankit, would you like to ask something? Or Kirti?
No, ma'am. Thanks. So all the knowledge which she is providing is very well, and I'm understanding it very well. Linking section is a very well method. Thank you, ma'am.
Very good, very good. Kirti, would you like to say something? Kirti, are you there? Okay, no problem. Kirti, Ankit, or the people who are going to view the recording sessions also, because we have noticed students wants to view the recorded sessions basically. Live में अभी नहीं है, but live आप आइए यहाँ पे actually क्या one-to-one interaction is there. In case you have doubt, then definitely you can directly ask to the teacher, and they are very helpful. Immediately your doubt will be resolved. So try to join live classes. In case the people who are going to listen the recorded versions also, I will say ki please fill the feedback forms. We are looking for your feedbacks for improvising our LBC classes. And in case you feel ki some more illustrations to be added, some more practical problems need to be focused on, amendment sections you want to understand, because abhi aapne dekha hoga, for the foreign companies 35% rate is being applied on royalty whether there is P के case में 20% rate is there. Earlier it was 40%. It is coming to 35%. How that rate is derived from? That you should know from where the 35%. Foreign companies के लिए 35% rate is there. But when we are talking to royalty के लिए बात कर रहे हैं, तो royalty पर 35% क्यों लगा वो rate? कहाँ से drive हुआ that rate? वो उसके लिए आपको कहाँ से पता चलेगा? वो that type of questions you should ask to her. मेरा कहने का मतलब है जैसे आपने सेक्शन कोई भी आपको रॉयल्टी पढ़ाया या आपको केस लॉ से रिलेटेड पढ़ाया, तो यू आस्क क्रॉस क्वेश्चंस आल्सो टू हैव अ बेटर अंडरस्टैंडिंग ऑफ दोज थिंग्स. बिकॉज आपको क्या चाहिए, मेन तो आपको स्ट्रैटेजी आपकी कैसे फॉलो करनी है, आपकी प्रिपरेशन स्ट्रैटेजी मैटर्स अ लॉट. ठीक है ना? तो उसके लिए क्रॉस क्वेश्चनिंग, आप उसमें जब इन डेप्थ पढ़ोगे तो आपको क्वेश्चंस भी माइंड में आना चाहिए. 20% आप देखोगे, इफ यू सी 20% रेट कब लगेगा, जब पी नहीं है, उसके साथ में अदर कंडीशंस आर आल्सो देयर. सेंट्रल गवर्नमेंट से अप्रूव्ड होना चाहिए. एम आई राइट? या और 35% जब रेट लगा है, वो 35% कब लगा, वाई, कहाँ से डिराइव हुआ, किस सेक्शन में लिखा है 35% रेट? That type of question you should ask. That's my concern, because I want ki you should make full use of these classes. आप देखोगे प्रेरणा, when we were studying, we do not have such kind of facility, right? And we are looking for here and there. Still, students are moving here. I don't know why. We are here to help you. You come here, make full use of these classes. And the next class is also again you come out with your doubts. जो भी आपको पढ़ाया, आपने ये देखे कि प्रोविजन कहाँ से लिखा है. Try to understand with the help of the Bayer Act also. This is what I want to say. I think we can conclude as section 9 हो गया आपका. Next में she is going to move to the next section of this chapter, right? तो अभी तक जितना किया है वो आप complete करके आइए. उसके बाद you come personally and attend these classes. Now I think it's already you are here for 3 hours. I can understand 3 hours से क्लास करते करते आप ऐसा हो जाता है कि now it should be over. बहुत हो गया, 3 hours बहुत हो गया. तो ठीक है, आपने इतना किया. इसके बाद हम अभी इसको इस टाइम कंक्लूड करते हैं. We will be meeting in the next class again. In case you have any doubt, you can ask to me and you can ask to Prerna ma'am also. We are here to help you students, right? Prerna, now we can close the session.
Sure, ma'am.
Yeah. Thank you so much, Prerna. Thank you, students. Yeah, thank you. Now we can close. Technical team. Thank you so much.